Have you ever wondered if the money you're growing with Nutmeg is going to get hit by a tax bill? It's a question many of you have asked, and it's a really important one. Because while investing is all about making your money work for you, you need to know what happens to those returns. Will a chunk of your profits go straight to the tax man? The short answer is, it depends. Nutmeg offers different types of investment accounts, and each one has a different set of rules when it comes to tax. Let's break it down, because understanding this is key to building your financial future. First up, you have the tax-efficient accounts, the stocks and shares ISA, the lifetime ISA, and the personal pension. These are the big hitters for tax-conscious investors. The word ISA stands for Individual Savings Account, and it's your best friend for tax-free growth. When you invest in a stocks and shares ISA with Nutmeg, any profits you make, from dividends or capital gains, are completely free of UK income tax and capital gains tax. The same goes for the lifetime ISA, which also comes with a sweet 25% government bonus. And with the personal pension, you get tax relief on your contributions, and your pot grows almost entirely tax-free. These accounts are designed to shield your money from tax, as long as you stay within the annual contribution limits set by the government. But what if you've already maxed out your ISA and pension allowances? That's where the general investment account comes in. This is a flexible account that lets you invest as much as you want, but unlike the ISAs and pensions, it doesn't have the same tax benefits. With a general investment account, you will have to pay tax on any investment income and capital gains that you earn above your personal allowances. This is where you might need to fill out a tax return to declare your earnings. So, to wrap it up, whether you pay tax on your Nutmeg investments comes down to a single question: what type of account is your money in? For tax-free investing, the ISAs and pensions are your go-to. If you're using a general investment account, be prepared to factor tax into your financial planning. With that said, thanks for watching, and until next time.